Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Tech stocks drive gains across Asia after spurring a rebound on Wall Street, fueled by mounting expectations of a Fed rate cut in December. The EU rules out easing its tech regulation, rejecting Howard Lutnick's call for changes in exchange for lower steel and aluminium tariffs. Plus, a Bloomberg scoop, oil giant Saudi Aramco is mulling an asset sale to raise billions of dollars in what could be its most significant disposal ever. Well, it's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai. Lots to get through on this show, but let's start with markets because we did have a really solid day for Wall Street yesterday. Both the S&P and Nasdaq posting solid gains. S&P rising 1.5%, its best day in 6 weeks. The Nasdaq 100 ending the session more than 2% higher, its best day since May. And one of the drivers for that is you had yet another Fed policymaker in the likes of Chris Waller talking about a rate cut being on the table for December. And so the probability of a Fed rate cut come this December has dramatically shot up. A couple of days ago, we were sitting at around 7 basis points priced in. Now it's about 19 basis points. So really sharp Fed pivot in the last couple of days. And you could say that that's one of the reasons why markets have been rallying so hard. Overnight, though, what we're seeing is a moderation of sorts. S&P, NASDAQ not doing a whole lot. We are trading sideways. 10-year yields, though, continue to rally. 4.03. Looks like we're going to test 4% again very, very soon. Euro in focus as well. We've been talking about some stabilization come through for the greenback. Keeping a close eye today on those increasingly testy, I would say, trade negotiations between the EU and the U.S. We're going to play some tape from Howard Lutnick later on in the show. But switching over, there's one stock in particular I want to draw your attention to. People involved in this space are probably massively aware of this, but just take a look at the huge outperformance of Alphabet, Google, versus some of the other hyperscalers. Just in the last couple of weeks, overnight, another leg up as well on news that Meta may be considering spending billions of dollars on the TPU chips that are manufactured by Alphabet. So again, what you're seeing here is some winners versus losers emerge in this space. And on the back of that this morning, you are actually seeing NVIDIA drop a little bit because there is more competition coming through from the likes of Alphabet. So something to bear in mind. Before we move on, I also want to bring you some data that's come through from Europe. European car sales have risen 4.9% to 1.09 million in October. No surprise, the European sales of electric vehicles, EVs, jumped, driven by a 40% increase from plug-in hybrids. And registrations of fully electric cars were up by almost a third. In terms of the breakdown, Renault up 11% last month, Volkswagen, BMW also posting solid gains. But Tesla saw registrations down 48%. So that continues to be a theme. EVs doing well, hybrids doing well, some of the European car makers gaining share, as is BYD in Europe. But Tesla registrations continue to drop on the continent. Okay, let's zoom in also on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio. What are you watching out for this morning, Min Min?
Hey, Jumana, we are seeing the Asia-Pacific benchmark moderately in the green today. I would say the Nikkei and the Kospi, the risk sentiment has been a little bit fragile because these two were flipping between gains and losses earlier this morning. But we have a couple of macro stories. There is, of course, the repricing of the Fed rate cut in December that is providing a tailwind. There is also the Trump-Xi phone call this morning talking about soybeans, about the trade truce, about Taiwan and Ukraine as well. But overall, the sentiment between the two sides looking quite positive, and that is sending the Hang Seng higher as well. President Trump did speak with Takaichi as well over Taiwan, pledging or reassuring that strong relationship between the two sides. But the big story today really is about tech, right? We saw the tech-driven rally continue on in Asia. There is the story overnight in the U.S. with NVIDIA, right? We saw NVIDIA fall in the news that Alphabet's TPU chips is becoming quite popular with companies like Meta buying them, and we are seeing some of these Alphabet-related stocks seeing huge gains to the tune of 17% for some of these. But on the flip side, if you look at SoftBank, we are seeing big decline there on the back of its bet on OpenAI. It's 10% down, and there's all this speculation about how Gemini, which is Alphabet's app, is possibly a strong rival against ChatGPT, OpenAI's ChatGPT.
Yeah, most definitely. And of course, they have a huge investment stake in OpenAI. So it explains some of the move today. SoftBank down 10%. Well, the European Union's antitrust chief has ruled out easing the bloc's tech rulebook after U.S. Commerce Secretary Howard Lutnick said Brussels needed to change its digital regulations in order to get a deal to lower steel and aluminium tariffs.
Everything is on the table when you have such a great partner as the European Union. They have 450 million people and a $20 trillion economy. So the opportunity is great. They would like to have steel and aluminum as part of this package. And we think it is very, very important that they understand our digital companies and they reconsider their digital regulations.
Well, for the latest, Bloomberg East Asia government editor John Herskovits joins us from Tokyo. Well, by the sounds of it, it looks as though EU is saying our digital rulebook, our regulations is not up for debate. This is not going to be a part of the trade discussions.
Yeah, we had the vice president of the EU saying that this is not a part of the negotiations, but the pressure is there. The steel and aluminum tariffs of 50% are hitting a lot of companies. I think there are about more than 400 goods that are affected. So the pressure is mounting on various EU members with these tariffs themselves. But for these digital rules, the Trump administration has really singled these out as something that it sees as the non-tariff barriers. These are part of the reasons why these reciprocal tariffs were put in place. So it's a focal point of contention. These digital rules hit some of America's biggest tech companies, and it's been a focus, and it's a really difficult one to resolve. But the EU says that these rules are not up for negotiation. This was an offer to roll back steel and aluminum in exchange for loosening these rules. It doesn't look like we have any movement at this time, but that's where the ball is now.
Yeah. So a bit of a stalemate there. Let me take you in a slightly different direction. We were talking about this yesterday vis-a-vis this upcoming Thursday deadline that the U.S. have put on Ukraine to accept the 28th peace plan proposal. How likely is it that we're going to see a breakthrough and over the next couple of days, especially given the pushback from Ukraine and Europe?
Sure, we've heard some optimism from Trump, but actual members of his administration, such as Secretary of State Rubio, have rolled back this idea of a Thursday deadline actually taking place. We've seen Ukraine push back on these demands, which are very similar to the maximalist demands that Russia has made. No joining of NATO. They are looking for limits on Ukraine's troops and Ukraine making territorial concessions that Ukraine doesn't see as justified, legal, or warranted. Ukraine is also in a difficult position. It was hit with drone and missile attacks today. It's getting pressure from the U.S. on the political front, and it's seeking help from the EU, but really not getting the backing that it's looking for to go forward with some sort of deal. So the Thursday deadline just doesn't look like it's going to happen. And we've seen these deadlines come and go so many times over the past several months and years.
That is true. Bloomberg East Asia government editor John Herskovits, thank you. Well, President Trump and his Chinese counterpart Xi Jinping have held their first talks since agreeing last month to a tariff truce. Trump says the call was very good and touched on issues such as trade and Ukraine. He also says he will visit Beijing in April and that he invited Xi for a state visit next year. But the White House readout of the call did not mention Taiwan. A Chinese foreign ministry statement says Xi told Trump the return of Taiwan to China is a key part of the post-World War II international order. Well, to talk about markets, joining us now is Patrick Armstrong, Chief Investment Officer at Plurimi Wealth. There's so much to talk about. You know, it really feels as though in the last couple of days, the narrative of the market around the December Fed cut has really changed. I mean, rightfully so, because the language out of Williams and Waller has been so dovish. Yeah. What do you make of this Fed pivot?
Well, I think they've softened their narrative, and I think the market misread the jobs numbers initially, that the jobs created spooked markets thinking maybe that Fed cut isn't going to happen, but the unemployment rate ticked up on that same jobs report, and that's why we've stuck with our view that the 25 basis points is coming. What recent moves, though, reinforces how important liquidity is to this market, and we've got the U.S. market at record multiples on price to sales, on EV to EBITDA, it's near an all-time record as well. So liquidity is key. If you don't have that Fed cut, I do think the market's overpriced. With the liquidity coming and probably a continuation on to next year, I think you have a continued risk rally.
Interesting. Okay, so you've got the valuations. You point out the valuations. Are you looking to de-risk into the end of the year then?
A little bit.
Of that?
So I really like a lot of the Magnificent Seven. I don't own Tesla and I don't own Amazon, but the other ones, the multiples make sense to me. And I love to own Google and short companies.
We were just talking about that on the top of the show today.
It's got a lot going for it, and it trades at a small premium to the market multiple. We've been short Oracle for the last month. And Oracle, when we put the short on, was 60 times earnings. It had to borrow negative cash flow to fund its AI data center build-out, whereas Google's funding everything from operations. So it's just a very de-risked approach to the AI data center.
Is that how you're picking the winners and losers and hyperscalers? So who essentially has the cash versus who has to go out and borrow?
You've got such an entrenched customer base with all these companies already with so much cash, it's really hard to dislodge them when you're fighting on two fronts. You've got to dislodge their customer base and you've got to finance it. And with real yields actually moving up a little bit recently, it does make financing even more risky as well. So
interesting.
It's been a frustrating summer for me where the market really rotated into companies that didn't have earnings and had the prospect of generating money on AI and various themes with no clear path to doing it. But the market just rewarded narrative around AI. And I think over recent weeks, the market's pivoted back to more fundamentals, which I'm much more comfortable with.
How are you feeling about NVIDIA at this point? I mean, the earnings are pretty solid, but again, one of the themes that has emerged in the last couple of days is they are getting more competition from the likes of Gemini, from Alphabet, from China.
In a quasi-monopoly right now.
Yeah.
In 1 year, it's going to be in a quasi-monopoly. In 5 years, I don't know if it will. There will be disruptions. There will be competitors. And we may be even seeing it now with the TPUs from Alphabet coming out. Or not coming out, maybe being released to other third parties. So it's a stock that the valuation makes sense with me. It's not compelling valuation. It's real compelling growth, real compelling profit margins. You can't discount those profit margins forever. You are going to see erosion in those profit margins. It's the third biggest weight in my equity portfolio. But I'm underweight the MSCI World. So I've gotten a 4.5% weight, and it just shows how big its market cap is. With an index with 2,400 companies, it's a 5.6 weight in the MSCI World.
Yeah, you can't not have exposure to NVIDIA, I guess. How are you thinking about other parts of the market? One of the big questions has been whether this rally can broaden out. Do you see opportunities in other sectors of the market that is non-tech?
Healthcare is something we've been adding to throughout the summer, and it's actually really been rewarded. Healthcare's had a really strong month. We own Eli Lilly, Johnson & Johnson. We just added AstraZeneca. So the market's really been spooked by the Trump and the White House potential lawsuits. We're short Moderna, though, and that's a company we do think could come under that threat. It doesn't have a real broad product suite. So it's also stock-specific, but healthcare is a sector that's lagged. It's cheap, real predictable cash flows, and we're attracted to that right now.
Yeah, okay. So it's a valuation play, and obviously it got beaten down throughout the course of this year. I want to turn also perhaps and refocus on the macro again, because in your note, you talk about inflation being the most mispriced market. Yeah. Do you expect us to see an uptick of inflation in 2026 then?
I do by the end of 2026. I think we're going to have a politicized Fed by the time we get to May. So I do think the Fed cuts in December. I think Powell's going to speak quite hawkishly, and the market's not going to listen to it because they know he's a lame duck Fed chair at that point. And Trump says he's already chosen the next Fed chair, and the way you apply for that job is say, I cut 50 basis points a month, and that's what Trump wants to hear. So we are going to get a very dovish Fed in the spring, and I think that fuels an uptick in inflation in 2026 and the next decade. Everything populism does.
Is gold reflecting that at 4,000? I mean, you look at something like U.S. five-year break-evens. We're at 2.1. Yeah. It's not being reflected there. But would you say it is being reflected in gold?
I think gold is what many people are looking for as a safe haven with geopolitical risks and inflation risks. Tips are just a much more compelling safe haven than gold that I lock in on a 10-year tip.
Inflation-linked bonds, to be clear. Yeah.
Real yields, whatever inflation is, I'm getting 2% above for the next 10 years, risk-free from the government. So the government can almost default on 94% of its conventional bonds by printing new money to pay off the old debt, create inflation. That's how it manages its debt dynamics. The tips, it can't default on because as you print money, inflation goes up. So I think that's a real safe haven. Gold equities, for me, are far more compelling than gold as a speculative asset, which I think gold is at this point. If gold stays at $4,000 over the next 12 months, companies like Kinross Gold are at 6 times earnings right now. So gold gives you zero return in that environment, but Kinross buys back its shares. It produces massive cash flows with the gold. So tips for a safe haven against inflation, gold equities as a speculative play is much better than owning gold outright for me.
Patrick, so interesting. Thank you so much for coming on and sharing your views. Patrick Armstrong, Plurimi Wealth CIO. Well, still ahead, we'll be talking to the CEO of Barclays South Africa about the country's economy and more. But first, Bloomberg learns that Saudi Aramco is considering plans to raise billions of dollars by what could be its biggest ever asset sale. We'll have more next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. Bloomberg has learned that Saudi Aramco is considering raising billions of dollars by selling parts of its business, including stakes in oil export terminals and real estate. Aramco aims to free up cash for investments amid a recent drop in oil prices. The effort to sell assets could rank as its most significant disposal ever. For more, we're joined by Bloomberg's chief global deals and finance correspondent, Dinesh Nair. So this is interesting. What more have we learned about these plans? I mean, clearly it's a big deal that they're looking to sell stakes in their export and storage terminals alongside real estate. This is a big portfolio that we're talking about.
Yeah, it is, and it'll be quite significant. Right now, I think they're studying the feasibility of that. But our understanding is that at least when it comes to the export terminals, they are quite keen to see if they can kick off a process as early as next year. And could be significant. I mean, we've learned that they could raise at least $10 billion from that process. And to be fair, Saudi Aramco has sold assets in the past, but it's kind of been always limited to their pipeline infrastructure.
Yeah.
What we've also learned, which could be very interesting,
but typically with stakes in those assets, right?
They were mostly sale and leaseback transactions. So they've not sold an equity stake per se before. And that's what is interesting, because our reporting, we found out that Saudi Aramco is now thinking of potentially even selling an equity stake in its terminals business, which could be probably the first time they're doing it. And that's why it's quite a significant move.
Okay. And who are the typical buyers that would be interested in this? Are we talking about institutional buyers getting involved?
It's most likely institutional investors. So, Jumana, what is happening in the region is quite interesting, that there is a proliferation of these big funds into the region.
Yeah.
They're all setting up shop, as we know, in different parts of the region. But they're also quite keen to do deals, in the region, which is a big change from a few years back. So that is now creating interest for some of these crown jewel assets. And on the other hand, the state entities in the region are now thinking we can control these assets, but we don't need to own 100% of it. It's a quick and it's a good way to make money and reinvest that into projects which we want, which we're keen about for the future. So I think the combination of these two things, in the case of Aramco, we were told that after the sale and leaseback of the Jafurah assets, they've had a lot of inbound interest from investors, bankers pitching them ideas. So there's an added motivation to think of it, because there is a demand for these kind of assets.
And I guess the macro question that people are going to be asking is whether the backdrop to all of this is simply lower oil prices.
It is one of the factors, but and generally in the region, as you've seen, with whether it's with ADNOC and Aramco, they tend to act on these things when oil prices are a bit below where they need it to be. But it's not the only factor. I also think the demand which is coming from the institutional investors across the world, some really big investors, the likes of a GIP or a Brookfield or a Blackstone, they want these assets. So that's also driving them to think about it. Plus also the fact that they can still control this. They're not giving up control, but they're getting very sophisticated large investors to come into this.
Yeah. Dinesh, so interesting. Thank you for bringing us the story. That was Bloomberg's Dinesh Nair. Well, coming up, European and African leaders are meeting in Angola to strengthen ties on trade and minerals. We'll have the story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Versace in Dubai. EU and African leaders are gathering in Luanda, Angola for a summit focused on trade, security and the future of economic ties between the two continents. European Commission President Ursula von der Leyen said the bloc's priority is creating the right conditions for investment and growth across Africa.
We are now working to de-risk, make finance affordable, and offer guarantees, so create a conducive environment. And this is how we can support investors to finance projects in more challenging markets, because they have the ideas, they have the projects. What they need is this conducive environment.
Bloomberg's Ndiro Ganga joins us now from Kigali, Rwanda. Ndiro, I guess the question is, can Europe actually step up to meet Africa's development priorities?
Good morning, Jumana. That's the million-dollar question. This summit comes at a time where the relationship between Africa and the EU is changing. And it's changing first. On one hand, you have a continent that is trying to rid itself off of that post-colonial hierarchy. The continent is pursuing industrialization. They want development. They don't want that initial plan where they would just extract and export raw materials to Europe. They want economic dignity so they can reduce dependency. On the other hand, you have Europe. They're beginning to realize that the influence in Africa is eroding. They're no longer the default partner when you think about Africa. You have new players, and they're really aggressive. Take China, for example. They're the continent's leading bilateral trade and lending partner. On the other hand, you have Russia. They're building a solid footprint in West and Central Africa in security partnerships. Then you have Gulf states that are bringing in capital. They're doing investment in infrastructure, technology, and energy. And so those traditional markets that were considered EU's forte, including capital markets, technology, are being challenged by these new power brokers, and Africa is beginning to warm up to these new players. Now, when you look at it that way, both players have cards on their hand to lay on the table, but the big equalizer here is that they also have very unique challenges. You look at Europe, immigration is a big problem, geopolitical tension, sluggish growth. Africa, on the other hand, instability and mounting debt. And so when they come to the negotiation table, they're driven by urgency, and they're also driven by uncertainty, to mean they need new deals to ensure economic resilience of both parties. And though EU did not put solid monetary pledges on the table, we've seen a big promise of AI. They don't want anybody to be left behind. They want to work with Africa in areas of healthcare, education, predicting climate disaster using AI so that nobody is left behind. The big question is, can they provide that strategic value? Yes. But the test here is Africa is going to measure that success, not based on promise, but on the impact that they have.
Ndiro, thank you so much. Ndiro Ganga in Kigali, Rwanda. A quick look at how markets are faring before we head to the break. Things are stabilizing, but we had a very strong day for S&P and NASDAQ yesterday. By the end of the session, S&P up 1.5%, the NASDAQ up 2%. Today, things slightly in the red, down about 0.8%. Coming up, as global investors turn their focus to Africa, we'll find out what's driving the renewed confidence. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Tech stocks drive gains across Asia after spurring a rebound on Wall Street, fueled by mounting expectations of a Fed rate cut in December. The EU rules out easing its tech regulation, rejecting Howard Lutnick's call for changes in exchange for lower steel and aluminium tariffs. Plus, a Bloomberg scoop. Oil giant Saudi Aramco is mulling an asset sale to raise billions of dollars in what could be its most significant disposal ever. Well, it's just gone 9:30 a.m. across the Emirates. I'm Jumana Versace in Dubai, taking a look at these markets because once again, we had another Fed policymaker suggest that a rate cut is on the table for December, this time in the likes of Chris Waller. So you've had two back-to-back. You had John Williams on Friday, Chris Waller yesterday, and now the odds of a rate cut have gone all the way back up to 19 basis points priced in versus about 7 basis points just a couple of days ago. Really tells you how hard and fast this pivot has been in terms of Fed rate cut expectations. Big catalyst for the rally yesterday. Wall Street very solid. S&P rising 1.5%, its best day in 6 weeks. The NASDAQ up 2%, the best day since May. Today things are stabilizing a little bit, as you can see, slightly softer. 10-year yields also seeing a big run-up, big rally as we head into this quite eventful day in terms of data. You're going to be watching out for retail sales and PPI, both important numbers as we think about all of the data that the Fed will have to think about going into December. And then Euro, keeping a track on that as some of these discussions between the EU and US turn a bit thorny, particularly as it pertains to digital regulation, where the EU don't look like they want to give any ground. So something to think about there. And then switching over the charts of today, I just wanted to encapsulate how much of an outperformance we're seeing for Alphabet stock. Take a look at that white line. Compare that to Amazon, Meta, some of the other Magnificent Seven. And it's been a huge outperformance. The theme has been a huge outperformance over the last couple of months, namely because of the success of Gemini, their own LLM, but then also with the success of their TPUs. Overnight, there are reports that Meta may be looking to purchase some of Google's TPUs for their own systems. So it's one of the reasons why it's trading up today. Has not been a positive story for NVIDIA, which is actually trading in the red. So more competition coming through GPU versus TPU, and something, if you're involved in that space, to watch out for. Emerging narrative. All right, let's zoom in also on how markets in Asia are faring. Min Min Lo is in our Hong Kong studio. Min Min, walk us through the price action.
Hi, Jumana. Yes, we are seeing the Asian benchmark trading moderately higher, about 0.4% higher. But you can see here the Nikkei, it's pretty flat and it's really been dragged down by SoftBank. We are seeing big declines there to the tune of almost 10%. But the broader benchmark still pretty resilient here, holding on to gains just in the green right now. The Kospi as well. Taipei's TAIEX is really being led by TSMC, the stock gaining on the back of announcement that the company is building 2 more new plants on the island to meet the AI demand. Hang Seng is also up on the back of this phone call between Trump and Xi, and overall sentiment from both sides being quite positive as well. But here you can see SoftBank, a big decline here. But some of the Alphabet-related stocks here are gaining. SK Hynix, Samsung, the tech names in South Korea are doing pretty well today. Now, what else we're watching in China, of course, is Alibaba's earnings. It's a corporate story, but potentially going to be a macro story, because if Alibaba beats expectations, it could potentially give that AI rally more legs to run. And you can see it is indicated about 1.3% higher ahead of the earnings. We'll, of course, be looking out for commentary on its capex spending, its cloud revenue. Xiaomi also gaining after the founder, Lei Jun, increased his own stake in the company, and it's up now about 5%. Jumana.
Min Min, thank you so much. And of course, we're keeping a close eye on those Alibaba earnings. We'll be previewing that later in the show. Well, South Africa's Deputy Finance Minister says improved investor sentiment is creating opportunities for the country. On the sidelines of the G20, David Musando said South Africa is in a, quote, sweet spot, benefiting from stronger revenue collection, tighter fiscal discipline, and a recent credit rating upgrade. Joining us now is Amol Prabhu, Barclays South Africa CEO, and Jennifer Zavazaja, our Chief Africa correspondent. Amol, I'm just going to start off by asking you your thoughts on the G20 that was held in Johannesburg in South Africa. What is actually meant and translated to in terms of putting South Africa on the global map?
So good morning. Thank you, Jumana, and also Jennifer, for inviting me here. So look, it's a good morning to all your viewers. So I think I think we are in a sweet spot. I think I've covered the continent personally for over 10 years, and I haven't seen a better time for South Africa. I mean, as you know, in addition to the G20, we're off the grey list, inflation's coming down, S&P have upgraded us recently, the GNU is holding together, so there's a lot of positive data points that are coming through the economy. I think also, specifically on the G20, there's a lot of focus around last week in terms of the crescendo that happened, the meetings that happened, etc. But I would remind viewers that these discussions have been going on all year across the G20, the B20 and other initiatives. And we have seen, certainly within Barclays, a real increase in investor sentiment in putting South Africa on the map, in increased interest in looking at opportunities, investing in the country, etc. So I think it has been a real win for South Africa across 2025. The real question, Jumana, is can that momentum, can that leverage continue throughout 2026?
And Amol, what does that mean in terms of some of the expansion for Barclays in the region, potentially where you're investing into as well, especially if you think about some of the conversations that you were having prior to G20? Where is the bank focused on right now?
So I think the bank is the bank's been operating for 330 years. So I should remind viewers, we're older than the United States, and we've been operating on the continent for over 100 years. But I think strategically, from a business model perspective, we're focused very much on South Africa and Anglophone Africa generally. Kenya, Nigeria, Ghana, and I shouldn't, of course, forget Egypt in North Africa. They're the big five, as I call them. And we are investing significantly, both organic growth, supporting our clients grow, and it's mainly African families, businesses, companies with global needs, and global clients that we're seeing invest in the continent. And again, it's a super interesting space to be in, because we've had investors who know Africa risk who just simply want more, and also other global clients who maybe be overweight developed markets, want to pivot a bit more into emerging markets, and are willing to do the homework around Africa, willing to go to their credit committees and ask for different opportunities in Kenya, South Africa, whatever it may be. And we're obviously there to support them and help them in that journey.
Can you talk to the private wealth business and the growth of that? Last week I was speaking to Standard Chartered president of International, and he was saying it's growing in Africa, at least from their perspective. Is Barclays seeing the same sort of activity across the continent?
100%. I mean, so we have, so for the global families that we support, many of them, and we call it bridges, so Africa into the UK, into Europe, into Dubai, India, Singapore, and we see a lot of families now where, you know, mum and dad might be in Nairobi, you've got a child in the UK, a child in Dubai, you've got a global family business. And when I say child, they often are married with their own children, yeah? So it's multi-generational. And I think from a bank perspective, and particularly a private bank perspective, is how do you support those families across generations, across locations, across businesses, and being that trusted advisor, investment partner, particularly look in the global volatile world we live in, things change, things develop, and making sure that our clients are informed and they're agile to take advantage of opportunities that comes up is absolutely central to what we do.
Yeah, Amol, I guess one of the risks, especially with any emerging market economy, is that the money that comes in could also be quote-unquote hot money. It comes in and it comes out. What needs to be done to secure longer-term investment from the international community, and what sort of financing should that take? Should there be more of a focus on equity financing versus debt financing?
Yeah, look, it's a good question, and I think what you're really talking about is the notion of patient capital. So rather than exactly as you say, money coming in, coming out, you want long-term investment. Now, I would almost, to answer that question, take a few steps back. I think there has to be some education on both sides of the table in terms of investment in Africa and emerging markets generally. So the relevant global investor, you know, there's a lot of noise out there, a lot of information, a lot of disinformation. It's really being able to cut out the noise, know what the risk is, know what the opportunity is, and really doing the homework around country, sector, opportunity. I think linked to that is obviously on the other side, the relevant entity, company, family that's looking for the investment. They need to make it easy for these investors to be able to invest. They need to have data, transparency, governance, etc. You often know what global investors are looking for, and what you want to do is position yourself in the best way possible to attract that money. And again, we help clients because we often find it's not really a question of accessing capital, it's accessing the right type of capital for your particular business. Some clients do want hot money, others want long-term money, others don't just want money, but also are willing to give, for example, board seats, because they want strategic knowledge from that investor to help them drive the journey. So they want the knowledge and the know-how in order to be able to do that. So it's making sure there's a cultural fit. It's making sure you get the right investor for the right opportunity for the right company, and then things can develop and grow.
So then, Amol, just finally, do you expect then to see potentially more deal flow in the next few months, or is it still going to be a bit of a waiting moment at this point?
I think it will give everyone the summer break.
So winter in some places, yeah.
But I think you're absolutely right. I think in 2026, we are absolutely seeing, we already have a strong pipeline across our investment banking and private banking form of our global clients looking and wanting to hear about opportunities. And we're obviously talking to our clients on the ground to make sure they're appropriately positioned for that. So, as I said right at the beginning of our discussion, super positive, super excited about South Africa and the wider business. And really, it's hopefully 2026 will be a transformational year for the market.
Amol, thank you so much, and enjoy the upcoming summer holiday season then. Amol Prabhu, Barclays South Africa CEO, and Jennifer Zabazaja, our Chief Africa correspondent. Now, U.S. Commerce Secretary Howard Lutnick says President Trump will decide whether to allow NVIDIA to sell its more advanced H200 chips to China. Lutnick spoke with us from Brussels about the national security concerns surrounding Trump's decision.
That kind of decision sits right on the desk of Donald Trump, right? He's got Jensen from NVIDIA who really wants to sell those chips, and he's got a good reasons for it. There's an enormous number of other people who think that that's something that should be deeply considered. And the benefit that we have is we have Donald Trump in the Oval Office. He is going to weigh those decisions. He understands President Xi the best. He will decide whether we go forward with that or not. That's on his desk with lots of different advisors. The president loves to hear lots of different voices to make those kind of decisions, and he'll decide whether we sell those chips or not, and then we will go execute it however he decides to go forward.
There's a bigger question here, Secretary Lutnick, about what national security is. Is it more of a national security risk to give China some of these high-powered chips, or is it more of a national security risk to not have U.S. tech in China? Has your view on that changed?
Well, that's the question, exactly as well put and in front of the president, which is, do you want to sell China some chips and keep them using our tech and our tech stack? Or do you say to them, look, we're not going to sell you our best chips. We're just going to hold off on that, and we're going to compete in the AI race ourselves. So that is the question. It's in front of the president. He's going to decide. It's a really, really interesting question. He's got all the information. He's got lots and lots of experts talking to him, and he's going to decide which way he wants to go forward.
Secretary Lutnick, meanwhile, use of IEEPA for tariffs is in front of the Supreme Court. The feedback has been skepticism so far from many of the justices, conservative ones included. As this plays out, can you walk us through how you'd prioritize the different alternatives should the administration's use of tariffs via IEEPA get struck down?
So I was in the Supreme Court. I sat through the whole argument. The justices were tough on the beginning on the Department of Justice's, our person. But then they were much tougher on the other side, much, much tougher. So I left that day feeling very confident that we and the president was going to prevail on these IEEPA tariffs. So I think, you're hearing it from me, I think I was there in the courtroom. I heard it all the way through. I didn't sort of write my story halfway through. I sat all the way through to the end. The president's going to win that case because that makes sense for him to win. But I want to remind you, the president has lots of other authorities. He has 232s, he has 301s, he has 338s, he has a whole variety, 112, 122. He's got all sorts of other powers. And tariffs are going to be part of this administration going forward, but I don't think they're going to be necessary because the president's going to win the IEEPA case in front of the Supreme Court.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Bloomberg has learned that Abu Dhabi asset manager Lunate is in talks to commit as much as $1 billion to state-backed AI investor MGX. Since launching last year, MGX has become central to Abu Dhabi's AI ambitions, while Lunate has been involved in a few deals that dovetail into the Emirates' ambitions. For more, we're joined by Bloomberg's Money and Power reporter, Alex Duhler. Alex, first of all, just give us a summary of this potential deal.
Yeah, thanks, Jumana. So Abu Dhabi asset manager Lunate is in discussions to commit as much as $1 billion to the state-backed artificial intelligence firm MGX. So the discussions are ongoing and no final decision has been made. But it's a really interesting deal because if you look at MGX, it's a joint venture between G42 and the wealth fund Mubadala, and we broke a story a few months ago that they were looking to raise third-party capital. So it's come at a really interesting time that Lunate could be putting money into MGX.
Yeah, and what are the types of AI investments that MGX have been actively involved in? You mentioned the story that we broke, that they're looking to raise funds, but what are they looking to do with those funds?
Yes, yeah. So I think MGX has been the talk of the town in Abu Dhabi for some time now. Like I say, it is a JV between G42 and Mubadala, and they've announced a series of deals. One was their acquisition of Aligned Data Centers with BlackRock and a few other big investors. They also made a $2 billion investment into Binance. So they have been making a lot of headlines recently. And I think they're in talks as well to acquire some of the rights to TikTok and their US operations. So MGX has definitely been making a lot of headlines recently.
And equally also an exciting time for Lunate as well, the asset manager.
Yes. Yeah, so we did a feature on Lunate last week, and it was sort of looking at this investment vehicle in Abu Dhabi, and sort of 2 years after bursting onto the investment scene here, Lunate has kind of transformed itself into a prolific deal maker. So they've struck partnerships with Wall Street heavyweights, and they've even placed bets on the likes of OpenAI. They've deployed around $13.5 billion, and they've raised about $17 billion in 2024. So there's a lot of money flowing around and a lot of big deals.
Bloomberg's Alex Duller, thank you for helping us make sense of all of these deals that are coming through from Abu Dhabi. And coming up, Alibaba is set to report its second quarter results, with most analysts expecting faster cloud revenue growth. We'll have more on what to expect next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Alibaba is scheduled to report its second quarter results later today, and analysts expect to see an acceleration in cloud revenue growth. Bloomberg Intelligence senior analyst Robert Lee is with us now. So quite simply, what can we expect from today's earnings release? It's going to be a big one for the China tech space.
That's right. And I think you said in your intro there, all eyes are going to be on the cloud business. So on our numbers, we're expecting revenue growth in that business to accelerate up to the high 20s and even possibly the low 30% range. So accelerating momentum there, which is all good. But let's take a step back and remember that the core and the bulk of Alibaba's earnings come from the e-commerce sector, a sector that is subject to quite significant ongoing uncertainty, reflecting the rampant levels of competition in the sector. And also, as we've seen from, or we will see from Meituan later in the week, the local delivery and food delivery service is also subject to a lot of intense competition and pricing pressure at the moment. So the bulk of Alibaba's sectors derive from that, and I think there is significant risk to the margins on there. How much of that is priced in or is anticipated by the market, we'll have to wait and see.
Yeah. Well, yesterday, one of the big themes that we were talking about was the success of Alibaba's chatbot. I believe it's called Qwen. 10 million downloads of its app so far. It seems to be gaining ground rather quickly. How does it compare to its rivals? Is this a serious competitor in the LLM space?
Okay, well, I think coming from behind, Alibaba and Tencent have really caught up on the likes of Baidu, which, if we'd had this conversation sort of 2 years ago, was recognized at that point as the market leader in terms of chatbots in China. So they're clearly doing extremely well. The problem, again, as I keep coming back to, is monetization, because the majority of chatbots in the China market are available for free, including Qwen. It's only the premium version which is charged for. And if you look at some previous data over the last few months, looking at revenue data in the iOS market only, so this is the Android phone market, that Qwen chatbot was generating less than $1 million revenue per month. So, in the context of a humongous e-commerce business, that's nowhere near big enough to move the needle. I think that's the realistic view.
Okay, interesting. It did certainly grab a lot of headlines yesterday, though, but ultimately you got to think about its impact on the bottom line. Robert Lee, senior analyst at Bloomberg Intelligence, thank you so much. Well, just recapping some of the price action that we've had the last 24 hours, the Fed pivot is most definitely here. The market has now moved to more than pricing in the probability of a rate cut come December. We have about a 75% chance of a rate cut happening now. This moved up from as low as about 20% a couple of days ago. So really a reflection of some of the language that's coming through from John Williams, Chris Waller, suggesting that the rate cut is still on the table. Positive price action for Wall Street yesterday. S&P up 1.5%, the Nasdaq up 2%, and that is translated to a moderately positive session for Asia as well. Today, futures not doing a whole lot as we head into the European markets open. European futures are down 0.2%. Over there, we're keeping a close eye on some of the tense conversations that seem to be taking place between the U.S. and EU vis-a-vis the watering down of digital regulations, which is a non-starter for the EU. Other news, of course, President Xi and President Trump had a phone call. There could be a visit as soon as April, so that's been positive for some of these Asian stocks as well. I'll leave you with a picture of fixed income. But that is it for Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.